Hey, welcome to the Explainer. So imagine for a second an internet that's not run by just a handful of giant companies, but by us, the users. That's really the big promise of Ethereum. And here in 2025, that promise is looking more real than ever. So today, we're going to dig into how this so-called world computer is completely changing the game.
All right, so here's the game plan for today. First up, we'll cover what Ethereum really is. Then we'll dive into the billion-dollar ecosystem it's created. After that, we'll talk about the massive upgrades that have been happening, why Wall Street is suddenly so interested, and finally, we'll look at the promise, the peril, and what's next.
Okay, let's get right into it. When most people hear crypto, their mind immediately jumps to Bitcoin, right? But Ethereum, well, that's a whole different animal. See, Bitcoin's big idea is to be a new kind of money. Ethereum's ambition is way, way bigger. It wants to be the actual foundation for a brand new decentralized internet. And this is probably the best way to think about it. If Bitcoin is like digital gold, something you hold on to, a store of value, then Ethereum is more like digital oil. It's the fuel that actually powers things. It's what makes this new internet, this whole new generation of apps, actually run. So this whole thing was launched back in 2015 by Vitalik Buterin. And honestly, it was a pretty radical idea. Instead of everything running on servers owned by, say, Amazon or Google, Ethereum runs on a network of thousands of computers all over the world. And what that means is nobody owns it. No single company, no single person can shut it down or control it. That's why people call it a world computer.
Okay, so how does a world computer actually do anything? Well, the magic ingredient, the real secret sauce here, is something called a smart contract. The best way to picture it is like a vending machine. You put in your money, you press the button, and you're guaranteed to get that snack, right? No cashier needed. A smart contract is just like that, but it's made of code. It's basically a digital if this, then that agreement that just runs itself.
And it works in three really simple but kind of revolutionary steps. First, someone codes up the rules of the deal. If Alice pays Bob 1 ETH, then that contract gets put onto the Ethereum blockchain, and once it's there, it can't be changed. It's immutable. And finally, then the ownership of the digital art is automatically transferred to Alice. It just happens. No need for a bank or a lawyer or any other middleman to get involved. It's pretty wild. Okay, so now that we get the basic idea of smart contracts, let's look at what people are actually building with them. Because this is where you start to see a massive, real digital economy pop up. This is where that whole digital oil idea really starts to make sense. The absolute biggest piece of this puzzle is what's called decentralized finance, or DeFi. And really, it's just a new financial system built with this tech. It lets you do all the stuff a bank does, lend, borrow, trade, but without the actual bank. And it's the biggest slice of the pie for a simple reason. Traditional finance is just packed with middlemen and complicated rules, which is exactly the kind of stuff smart contracts are perfect for automating away. But it's not just finance. We're talking NFTs, digital collectibles, gaming, social media, the whole shebang. And just to give you a sense of scale here, look at this number. We're talking about over $250 billion locked up in these Ethereum applications right now. To put that in perspective, that's bigger than the value of many huge global banks. This is not a small experiment anymore. But, with all that growth came some serious growing pains. As millions of people piled in, Ethereum started to get, clogged. It got really slow and transactions got super expensive. It was a huge problem that could have totally killed its momentum. So that sparked this massive multi-year effort to upgrade the entire network to handle the load. And this whole upgrade process has been a journey. You probably heard about the big one, the Merge, back in 2022. That was huge. It slashed Ethereum's energy use by like 99%, literally overnight. But the work didn't stop there. More recently, in 2024 and 2025, we've had a whole series of other crucial upgrades, Dencun, Pectra, Fasaka. And all of these are laser-focused on one thing, making Ethereum way faster and way cheaper for everybody. So what was the big strategy here? How did they pull this off? Well, the answer is something called Layer 2s. The easiest way to think about them is like express lanes on a highway. They're these other networks built right on top of Ethereum that can handle transactions way more efficiently. And the result? You can see it right here. The vast majority of activity of actual transactions has moved over to these Layer 2s. And here's the bottom line, the thing that really matters for the average person. These upgrades made using Ethereum dramatically cheaper. I mean, after that Dencun upgrade we just mentioned, fees on those Layer 2s dropped by as much as 90%. All of a sudden, it became affordable for pretty much anyone to use. So you have a network that's now faster, greener, and way cheaper to use. And that has completely changed the conversation. Ethereum isn't just for the crypto-native crowd anymore. It's now catching the eye of the biggest players in the game, Wall Street. And they aren't just watching from the sidelines. They're starting to get in. So you might be asking, why the sudden interest from Wall Street? Well, they're starting to see ETH as more than just a coin you speculate on. They see it as a productive asset. I mean, it has real utility. It powers all these apps. It's also becoming more scarce, which is a big deal. And on top of that, you can earn a yield on it through something called staking. So when you put all that together, it starts to look like a foundational asset for a new kind of financial system. And because of all this, analysts are trying to figure out where things could go from here. You've got a few different scenarios on the table for the rest of the year. The base case is pretty straightforward. Steady growth, maybe hitting that $5,000 to $6,000 range. But then you have the bull case, where things like ETF approvals could send it rocketing past $10,000. Of course, you always have to consider the flip side, a bear case, where a market downturn or big hack could pull it back down. And if you want proof that this isn't just talk, look at this. We're talking 10 million ETH now sitting in corporate treasuries and these new ETFs. 10 million. That's what, over $46 billion? That's not just dipping a toe in the water. That is a massive vote of confidence from the institutional world. Okay, so with all this momentum, with Wall Street jumping in, is Ethereum's future a sure thing? Well, not so fast. There's still a lot to consider. So for our final section, let's really weigh the good against the bad, the incredible promise versus the very real risks that are still out there.
Look, the road ahead is definitely not all smooth sailing. Ethereum has some serious hurdles. For one, the competition is fierce. You've got other, faster blockchains like Solana nipping at its heels. Security is another huge one. Hacks are a constant threat. But maybe the biggest elephant in the room is regulation. Governments all over the world are still trying to figure out what to do with crypto, and a bad decision could really change the landscape overnight.
But on the other hand, the promise is just massive. You've got this asset that's actually becoming more scarce over time. We call that deflationary. It's paying out a real yield, around 3 to 4%, just for helping secure the network. And it's the undisputed backbone for this new version of the internet, for Web3. It's this weird, unique mix of things. Part digital gold, part digital oil, part productive machine.
Which really brings us to the final big question here. We've seen the amazing potential, but we've also seen the very real risks. So is Ethereum truly building the foundation for a new, better, more open internet? Or is it just so complex, so ambitious, that its own complexity might be the very thing that brings it down? I guess only time will tell, and the next few years are going to be absolutely critical.